What is the difference between Islamic bank and traditional bank? The traditional bank operate based on interest, which is prohibited in Islamic finance, and this creates dilemma for Muslims who seek banking services that align with their religious beliefs and values. Islamic banks offer an alternative solution by following Sharia principles, which are derived from Islamic law. These principles emphasize ethically and socially responsible practices and making Islamic banking a viable option for those who prioritize faith-based financial transactions. One key distinction is that the concept of interest. Traditional banks charge and pay interest, where Islamic bank operate on profit-sharing model. Instead of charging and paying interest, Islamic bank engage in profit-sharing arrangement where returns are generated through investment activities. Another difference lies in the type of financial product offered. The traditional banks provide a wide range of services including loans, mortgage, credit cards. An Islamic bank, on the other hand, offers Sharia-compliant products such as Islamic mortgage, murabaha, Islamic bonds, sukuk, and profit-sharing accounts, which is mudarabaha. And by educating yourself about the Islamic finance, you can make informed decisions that align with your values and financial goals. And if you want to buy or sell or invest in real estate, reach out to me and follow me for more real estate tips. If you have any questions about real estate, just click in my bio and just give me a call. Thank you so much for watching.